I am Jeff with Warrior Trading, and I'm going to do my swing trade watch list for tomorrow here. I'll be on for a little while. I have a few minutes to answer some questions, and then I'm going to run off to dinner. So let's see if I can't crank out this watch list. If something comes up, you guys have any questions, just please type them in the box there, and I'll get to them as soon as I can. Also, if you're new here to Ticker TV, you guys can follow my channel, and you'll get a notification every time I go live. If it's something you like and you have questions or whatever, you can certainly get a hold of me through there to ask any of them. I get on here about once a day, sometimes more, sometimes less, but certainly shoot for once a day lately. Okay, so tomorrow is going to be, I think it's the 11th, right? Tomorrow is the 11th all day, and we are going to need some trade ideas tomorrow. We got long some RCII today, which very pleased. Very pleased with so far. Definitely would have liked to had it hold up a little more. But we'll see what happens tomorrow. We got long on this at 11.20 initially. Sold in through this spike here. Put in a high of just under 11.70. And so definitely pleased with the trend of that trade here as we move into this gap. Our first real target is at 11.82. And our next target is going to be around the 12.70 area if we can move through the gap pretty swiftly. We also added to our position on SWFT. As this thing continues to try and break out of this bull flag here. Definitely has some nice room up to 1850 or so. We can even revise that here and be a little more conservative, and we'll shoot for 1830. Anyways, so those are a couple of the trades we have going right now. Looking for some more tomorrow. Let's see here. See what the scans have returned for us. I do like, let's see, CKP. Don't like this setup here. We have this obvious top right under 650, but we have this little breach over the top and then a failure to hold up. So it's pretty much a weaker, it's a weak indicator. Doesn't really inspire much confidence for a long setup. You can see it's been an area of resistance for quite a while now. Again, back here, not really a super clean setup here. So we'll flip through these. Don't like oil and gas. If anybody who knows me or the way that I trade, I'm trading oil directly. I'm pretty heavy in USO. We put on a pretty large buy right, and so we're in the middle of an oil trade there. I don't like trading stocks that are based in oils or financials or gold or silver. If I want to trade the commodity, I'll trade the commodity directly. So this is an interesting chart here on Sabre. We have this big sell-off and move down. Let me pull this up somewhere else. Yeah, we have this big sell-off following right before earnings. We have a big spike up into these moving averages here. We get a nice candle over candle confirmation, which is a great indicator, positive sign that we're getting continuation in the trend. And now we come up here and we tap the 50 to 200 moving average. So this area is a lot of congestion right here. It also happens to be support area from back in the beginning of the year. Interesting here. I don't really like how this thing popped up and then sold off. However, it did pop up in a relatively weak market. It is strong following its positive earnings, and it is testing a major resistance area. So if these things if this all holds up and can break over this 2650 area, I suspect we probably get a move to 2760. and then looks like we're probably going to take a little stop right through here, 26.90. So maybe this is a good long, even though I'm not a fan of today's candle. I do like the overall price action here. This immediate reversal off the lows, positive earnings, shoots right back up, and seems to disregard what the broader market is doing. So I do like this potentially for long here, maybe over 26.53, which is today's high. We want to see that candle over candle confirmation of trend continuation, and that'll also put us over the moving averages here. So we want those to be in our rearview mirror. This is potential for a long. We'll put this on watch here just as an option. It's probably not what I'd consider an A quality setup for the reasons mentioned, but I will write that this is a long. It's a long earnings winner with a nice reversal chart. Looking for move back to 27.60 ideally would be the first target. It falls within the ATR. It's also going to be previous support, which will act as future resistance out here. The next logical area is going to be up and through probably this $28 area, maybe 28.30s. But we got to deal with one thing at a time, and right now that's the first target, which is very clearly at 27.60, just before that. Remember, the long entry here is going to be over the highs. We'll put a stop in. I don't really want to give it much more than 35-40 cents. So I'll put a stop in at 26.10. All right, let's take a look at some of the other results that came up here. Another oil and gas stock, not interested. BGS, I've traded this one before, not recently, but this one has a nice chart from the lows here. This trending a little bit higher, right, making higher lows and higher highs. Looks like it's breaking out of this range, but it is not a clean chart, right? This thing has been sideways largely from 38 bucks to roughly 33 bucks. So it's really trading in a large range here. No real indicator or indication that it's going to break out up and over the top there. ATVI, this is a previous winner for me, big winner. I really enjoyed trading this name in the past. I like their products. However, I don't necessarily like the setup. This is definitely a reversal setup here, but unfortunately there's a couple things wrong with it. Let me pull up the couple things wrong with this. Oh, Jesus. Well, we have earnings tomorrow, so I'm glad I just looked at that. Not to mention, we're trading in a downtrend, right? We're below all the moving averages, and while we did have this a little reversal here, probably just short covering going into earnings tomorrow. So maybe for a day trade, but definitely not going to be a swing. NBIX, this is another reversal, another big downtrend sell-off here. It puts in a little bounce, doji at the bottom, and then it puts in this little, it's not really candle over candle here. Trading at a pretty large triple bottom. Too much risk there. As you guys go through and you build your own watch list, you should be able to talk yourself out of more trades than trades that you end up staying in. It is definitely something that is going to help you with your risk management. I can find something wrong with just about every trade. Keeps me out of a lot of losers, keeps me from over trading, keeps me fairly disciplined. So Smiley asked me, am I still in SWFT? Yes, I am. I was away today this afternoon. When it broke down, I didn't have a stop in. So I still like the setup, though. We haven't made new lows. We're still holding support at 17 here. It's been a really nice winter for us. So I will look to continue holding this as it continues moving higher. It's not the cleanest price action, but I really like the strength of the chart. And it's also a very nice earnings winner. So my plan for it tomorrow will be to flip it out at the 1830 area, which is my next target. Or we'll stop out. We'll stop out here if we break under 17 again. We'll consider adding, accordingly, depending on what happens. That 1766 area has been massive resistance for this thing, so we'll see. All right, so we're back to the charts here. Pacey. Another reversal setup, right? Get this big sell-off and this little bounce at the bottom here. Not really a clean setup. Carbonite, not a clean setup. Another reversal. Looks like that's all we're going to get. All right, Kirkland has earnings coming up in March. I'm a big fan of Kirkland products. This is not my favorite setup. However, I do like the chart more than I don't. It's really been struggling to bust over 1320 resistance on super light volume here. That's the only problem. It does not have the highest volume lately. But generally, puts in a couple 100,000, up to about 350,000 shares. So what I think about Kirk here is I know that there's a resistance area at this $13 area. Where's it at? Right about there. Damn it. 1330. It's really struggled to get over. Why this area? Well, previous support becomes resistance, right? So after this thing gapped down, it traded at this area of support for a while. And then when it finally broke through, now it's struggling to break back over. So previous support is now acting as future resistance. So that's really what we want to see it get over is this 1330. Let me check the lows here. This 1336 area. So what I suggest on this one, because I do like the setup, I do like how it's holding the 20 here after this little gap up. Let's see if we can get long on this bad boy here over high of day. We'll take this over $13 for a starter. Real small starter, right? Take real small risk on it. Let me zoom in here. There we go. So we'll get long on this over 13 bucks. We'll put a stop, a nice tight stop at 12.50, and then we'll add to this over 13.36 once we confirm the breakout here. This gives us a little 30-cent room, 30 cents of cushion once we break out. Over the top, conceivably, we'll have room to 14.10. We'll see some resistance in through here too, probably 14.70. This has a 70-cent ATR, so it's not going to move a lot in one day. Today it moved 62 cents, so it's not a wild ride. Just updating my written watch list now. Okay, again, the room here on Kirk is to 14.10 or so. 1370. We're going to risk about 30 to 40 cents. Once we add to this position, we'll have about a 1330 average, 1320 average. So we'll risk 20 cents. We'll put a stop back at 13 because by the time it gets up there, it's already going to push through the bulk of its ATR just to get to this breakout spot. So we want to see that sustained. We don't want to see it pop up again like it has over here and then continue to sell off. So we'll just bail at the whole dollar if it doesn't work. If not, we'll be in it to win it for the move over 14, probably the following day. Okay, Kirk is on watch there. So let's move on to something else here. I'm not sure we're going to get many more long bias setups. RJet, this is actually a very decent setup here. Over 222. Of course, let me look at something else. It does have earnings coming up next week and a half from now. Yeah, this is actually I've traded RJet before somewhat successfully. There's a pretty large area of resistance right here. Definitely looking for breakout over the 223 area, 224. Today's high was 222. It's only got a 20 cents a room, but it trades over 1 million shares a day, so it's very liquid. You can go a little bit heavier on this. In theory, you definitely have some room. Oops. God dang it. You got room to 264. I mean, that's 40 cents before you hit the next logical resistance area. Why is that? Because it's a previous support area. So previous support will become resistance here, more than likely. 40 cents away on a $2 stock. It's going to be like a 15% move, 20% move, nearly a 20% move. And I suspect we can probably get up to $3 here, right around the 50 moving average. So this is definitely a nice basing pattern here. It's kind of had this big sell-off. It's rejected the lows. It's held up higher, and it's tapped this 224 spot or come very close to it for a few times now. So I suspect once we get over that, we'll see some short covering and little room to the upside, and hopefully a move back to 264. So I actually like this for a potential long setup. It's kind of one of those that it has the potential to put in these big moves, right, intraday. And so I definitely, if I get a big enough move, I won't be afraid to close out the position, turn it into a day trade. If you get 20% in one day, maybe keep a little bit on, but I would never complain about a 20% move. It just depends on where it closes, how strong the finish is. Also, this thing was alerted yesterday after putting in a move off the lows from 186 to about 215 here. So this is the second day of this thing trending higher in the alert. Today you have this high volume day with a very small range. There's a lot of churn right here. And it tells us that there wasn't a lot of range today, but there was a lot of volume. We could see a fairly explosive move tomorrow. I wouldn't be surprised if this even gaps up. Okay, so gosh dang it. Okay, so this one, previous big mover is on watch for a breakout over this resistance top, following a ton of volume, ton of churn, high relative volume. Long entry is going to be over, we'll say 225. We'll put our stop down to $2. Target is Target is 264. And then 290. 290s. Okay. That puts us through most of the long bias scans that I want to look at today. The rest, like I said, most everything else is a reversal setup, which I'm not particularly fond of or excited about. So I'm going to flip over here to the short bias scans, and we'll look for some weak stocks ready to sell off if the market wants to come in tomorrow. We had some pretty big earnings in the in NASDAQ. I know we had, let's see, we had Twitter, and we have Tesla, and a few other companies reporting today. So tomorrow will be a interesting day for the markets. So basically, the short scan is a flip of the long scan for the most part, except it screens for higher priced stocks. Higher priced stocks tend to sell off a little bit faster. It's easier to find shorts in them than the small cap stuff. So we don't run into as many liquidity issues or short availability, borrow issues. Good old Monsanto here. So this thing has been on the radar a few times this year. It's been in this massive downtrend since last summer, following all their protests and takeover rumors and buyouts. And what's up? Do it? No. Oh, you're not talking to me. Okay, so we got this nice little bottom here. That's all I see on Monsanto. I see this bottom under $87. I think if that breaks away, we can definitely catch a move, down through 83.80s. It's about a $3 move. Definitely. So, okay. So let's see when earnings come up on this beast. Because we don't want to trade through or around earnings. Okay, we don't have earnings in the way here until April. So I like this for a short setup. The market stays weak. This thing's moving down here. They just settled. I didn't realize this, but apparently they had a settlement with the SEC for some accounting issues. Definitely someone's not good with their books. Yep, SPY is going to gap down again, but hey, what's new? Nothing really changes. It always gaps down, and then the buyers will come in late day, or it gaps up and then sells off all day. Either way, we don't make any progress. Okay, so Monsanto will be on short watch. For breakdown under 87. Big support area. Looking for a move to 83.80 and then toward 80 even. The market really comes in. Short entry will be under 87 even with a stop $88. We'll give it a point of room. So the reason I put the stop in there again is so you can adjust your size accordingly if this is a trade you're interested in taking. On a stock like this where you're going to give it $1 room, am I going to take 10,000 shares? No. One, because it would cost $80,000 to put this trade on, or $800,000 to put this trade on. But two, because I don't want to risk $1 with 10,000 shares. It's not good risk management. And it would blow out my my target for max loss in a trade and my profit target. So probably take anywhere from 1,000 to 1,500 shares to get started. Then we'll look to scale into this trade with a little bit more size. Once it's trending in our favor, we'll scale into weakness and scale out on weakness because it's a short bias. So same thing with long bias trades. We scale into strength and we scale out into strength. We don't want to average down if we don't have to. Okay, moving on. Okay, AMAG, not a horrid look here. I see not a lot of room to the lows. This thing has just really been sideways for quite a long time here. Yeah, you know, it's just really not a very active mover. I suspect if the market really wanted to fall apart, we might get a move lower, but the low here is it's $20.85. You know, below that, let's see. Okay, this looks good here. Actually, this is looking better now. Down to 1866. Okay, so our entry would need to be under today's low, which is at 2170. Okay, earnings are coming up on the 17th here. Oops, shoot. AMAG. Okay, so this is actually not a horrible setup. What we're seeing here is we have this big move down right over the past couple years. All of 2014 it runs up, middle of 2015 it peaks along with the IBB. Many of the others, biotech stocks, puts in this pretty harsh sell-off. And once it crosses over all the moving averages here, it's officially in a downtrend. There is very little hope for recovery. What we're seeing here is this test of this 20 moving average. It fails out, sells off again. We have a little test here of 20 moving average. Oh, but it got hit by earnings, so it gaps down. Another test of the 20, it fails. Another test of the 20, it makes it over. Hits the 50, fails that, back down. So we test the 20 again. The theme seems to be to sell back off. We're testing the 20 again. And in a weak market like we're in currently, I think the market, gaps down, sells lower. And we're only a couple points off of major support on the S&P. I think that this is probably another decent short opportunity. Oops. All right, let me right. Okay, so I'm going to put AMAG on short watch here. Trading over 2-year support. Let's see, we'll put a short entry on this. It's going to be under today's lows. Oopsie. Short entry is under 2169. Put a stop at 2250. So it's about 80 cents of room. I don't want to do that one. 2225. Oh boy. Room here is $20.95 or so. And again, these are just targets, guys, right? They're not meant to, go on your headstone as your date of birth when you die. It's not something to live or die by. They're just guides. So that, I think, will do it. We have SABR, KIRK, RJET, MON, and AMAG. 5 names on the watch list tomorrow. We have a couple open positions that we're going to have to manage in the morning, I'm guessing, which is fine. We know this market is super volatile, but that's okay because we have plenty of time on our side. We're still young, right? Plenty of time to recover. Take advantage of the moves down here. If you guys are in retirement accounts or you have retirement accounts, when I was an advisor, I'd always tell people that it is so important to see these as buying opportunities, these pullbacks in the market. Thanks to how inflation works, year over year, the market returns an average an average growth, in inflation. And so, if you had invested 1,000 years ago, 100 years ago, you'd be a lot better off today than you might be in the next 5 years. But if you're 25, 30, 35, 40 years old and you're going to retire soon, or not soon, you have 20, 30 years to retire, you can put money in the market today, and statistically speaking, you'll probably have a good opportunity to profit from inflation as well. So the idea is that our economy keeps growing. So that's why I say, we're young, plenty of time to recover. In the meantime, we take advantage of the volatility for trading for income. There's a lot of opportunity when the market is swinging big like it is over these past few weeks, few months. So really nothing to freak out about. The people who should be worried are the ones who are retiring in the next year or so, maybe the next 2 years. They're the ones who are going to have a little harder time recovering, but hopefully their advisors, their money managers put them into more conservative investments. They move to treasuries or bonds or something, because as you get older, your risk should reflect more capital preservation than risk. Your risk appetite should go down. So let's see here. You have some questions. I'm confused by one thing though. When you're trading during the day, do you wait for pullback on your entry? However, when you swing trade, you do the opposite. Can you explain that, please? It just depends. I have probably 8 different strategies that I use. Some are pullback trades and some are breakout trades. When I'm swing trading, I definitely prefer breakout trades. When I'm day trading, it just depends on the size of the move, the type of stock. I'll trade gap and goes in the morning, which are breakouts, and then I'll do momentum pullbacks in the midday. It all depends. So it's not black and white. It's very gray. You have to be flexible and nimble, and that's what I do. And then I don't know what this vampire-looking AA means. What is that about? Is it because of the fangs here? I see. I think I get it. So other than that, if you guys have any questions, whatever, give me an email, jeff@warriortrading.com. For those of you who are in the chat room, I'll see you guys in the morning. Other than that, I'll be back here tomorrow. Hopefully be more entertaining and have more energy for you. But there's just not a lot going on right now, and I'm not particularly excited about anything. I think I'll be more excited when the market either breaks down below this major support area or resumes trend higher back over 200. And it's very exhausting as a swing trader to have to deal with these giant whipsaws, which really, 30 points up, 40 points down the next, all to be at the end of the week the exact same place you started off as. So it's just very exhausting mentally. And so, we adapt our strategies, and we kind of, we adjust our risk tolerance, and, we take on different kinds of trades to account for different market conditions. But in the end, nothing is as fun as a trending market. And we don't care if it's trending up or if it's trending down, just so long as it's directional for more than a couple hours at a time. Makes things a little bit easier. But it wouldn't be a high-paying job if it was easy, now would it? Okay, so I will talk to everybody either in chat room tomorrow, or I'll see you back here on Ticker. Hope everybody has a good night. See you later.